And we have breaking news. Shares of Apple trading higher after hours. The tech company beating expectations for the first quarter on the top and bottom line. But it is not all good news. We are monitoring the conference call with CEO Tim Cook and other executives now underway as the company battles a new privacy scandal involving FaceTime. The headlines still pouring in from the report as well. We're going to bring you everything you need to know. But first, let's bring in the panel. Susan Lee, who's been following all of the numbers from Apple for the past half hour, is with us. Carol Roth, Gary B. Smith, Robert Wolf, and we are also joined by John Meyer. He's managing partner at Transpire Ventures. John, let's not try to sugarcoat it. This is the first quarterly decline in both revenue and profit in about 10 years for the month of December, including the month of December. But they had built expectations so low, it's hard to go any lower, right?
Correct. And the other thing that I think is extremely notable here is the year-over-year China revenue decline, which I think, according to my math, is roughly a 27% decline in revenue from China.
Yeah.
And then the other issue, obviously, is it's just frustrating to be banging our heads against the wall trying to come up with realistic ideas on what exactly the situation is with iPhone sales, given the lack of unit numbers being disclosed. And then, obviously, today, with the ever-growing story involving this new, clearly massive issue involving privacy with Apple, a company that to date, at least in my opinion, has not been a company to worry about as it relates to privacy.
Well, John, we were having a great conversation here with Robert about the China play that Apple has become, given that they guided on slowing iPhone sales. And they have a lot of cash on the books as well. We're looking at $130 billion. They want to get to net cash neutral, which interpreted means they want to give that back to shareholders. They've done that in the quarter, repurchasing and increasing dividends by $13 billion. Some would say Apple, if you look at it, there's still a lot of cash on the books, and it's going to be what it's always been for the last few years with slowing iPhone sales, which is kind of like an ATM machine. Do you see that as a way, as maybe a play on China and on cash?
Great question. I think Apple needs to start putting this cash to use as soon as possible. Quite honestly, you know, I don't know what has been going on with the lack of use of that cash as it relates to making big acquisitions. You know, clearly there could have been an opportunity, let's say, for Apple to pick up Tesla. That's come and gone. It's now far too expensive. Apple's now spun down a lot of their efforts in self-driving cars. Now, as we know, it seems to be more of a software play, but even that is completely unproven. China with Apple, I mean, serious revenue declines on that note. They still have not proven what they can do in emerging markets. India, I was on the show last month where I emphasized the 1% market share in India. You know, why isn't Apple releasing lower budget iPhones that are actually lower budget in, let's say, the $200 range, so that we can then see Apple be able to further take advantage of increases in software revenue, services revenue. And that's because Apple needs people with iPhones in their hands to increase services revenue in a meaningful way. Obviously, you can increase it somewhat year over year with existing device owners, but you know, it's going to be negligible if they're not increasing device sales, especially in emerging markets.
John, Gary Smith here. I want to get back to what you said about the services. This reminds me of a company, well, it reminds me of, not a company like, but IBM back in probably the 90s or so, when it was predominantly a mainframe company. Apple's predominantly an iPhone company. I think 60% or so of its revenues come from iPhones, and yet the services area was up about, services and non-iPhone was up about 19%. So my question is, like IBM, I know they're trying, but can they make the transition to a not predominant iPhone company to more a services company?
I think Apple has to at this point, because as I've been on the show, and the reason I think I've been on here a handful of times recently is because I like to talk about the ultra long term, especially with tech companies. And with Apple, we've now approached essentially the limit of this sort of super growth because of the iPhone. We're now entering a phase where as we get into the next 5 years, the next 10 years, it's going to be about, and this is not just for Apple, this is for all of tech, it's going to be about what is after the smartphone itself as a computing paradigm, because this is affecting other smartphone manufacturers as well. It's just it's hitting iPhone first because iPhone was first in the major smartphone industry. And really the only thing now that Apple's basically missed the boat on the car, they haven't really had anything to prove yet in TV. The only thing really left that is notable that we hear in the rumor mill is, again, Apple entering the augmented reality space sometime in the next few years, where there could be a bet made on AR glasses being the future of computing in an age where, let's say, in 5 to 10 years, we're not going to ever be using smartphones. So that could be the hope for Apple.
John, it's Carol Roth. You know, as an Apple shareholder myself, obviously I have been very focused on the services story because I really do believe, you know, they've got 1.4 billion devices. There's a huge opportunity there, not only for their own services, but for third-party services. I know it's been a bright spot, but why do you think that they have been slow to really put the pedal to the metal and bring in some of those third-party services and really monetize this very valuable ecosystem and customer base that they have?
Yeah, it's a great question. I think Apple really has historically shown that they do like to take their time with entering any sort of new markets, new verticals, et cetera. In fact, Tim Cook and even Steve Jobs back in the day were vocal about this strategy of taking their time and not rushing into new ventures, new verticals, et cetera. I think the key difference that is a missing piece of the puzzle is that in 2019, we are living in an age of remarkably fast advancement and innovation in tech as a whole. And if Apple's not going to speed up what they're doing in terms of innovating in new product categories, new revenue categories, they're going to get left behind. And I think that's what we've already seen, again, with the car. We've seen that with media as it relates to Netflix at this point just completely dominating the streaming space.
Hey, John.
And I think Apple's going to be too late with a few of these items.